Hello and welcome. If you tuned into a Market Fatafat with me, Ankita Saxena, and with me is Snehi Shah. In the next 1 hour, we'll take you through all the stocks that are buzzing either on the back of news flow or on the back of technical charts. But first, let's take stock of how the market is really shaping up right now. Snehi, we have given up those gains, whatever little recovery that we saw coming in. In fact, we have slipped below the 25,400 mark as well.
Absolutely, that's where we are at right now. Good afternoon. Let's take a look at what the market is up to in trade right now. Like Ankita mentioned, we're below the 25,400 mark, pardon me, on the Nifty. We had slipped below 25,350 at one point of the day. We've slightly recovered from there, but nothing in terms of a significant recovery coming in towards the day's point as of yet. Sensex 0.1% lower. You have Nifty Bank that's absolutely flat with a slight hint of a negative bias. Let's take a look at what the broader markets are up to in today's trading session. You have Nifty Midcap that's actually lower by 0.4%, and you have the small cap index too that's lower by 2.2%. So it's largely the broader end of the market that is underperforming the benchmarks today. What has managed to hold on to good gains in today's trading session from the Nifty pack is Bajaj Finance on the back of its update coming in for Q1. Wipro on the back of block deal. You have Infosys, Hero Moto, HUL that are doing pretty okay. On the flip side, tremendous pressure on Trent. Remember, it opened with a gap down of 8% and has now even deteriorated further at an 11% cut coming in for Trent on the back of a weak set of Q1 updates coming in, and you also have a Nuvama downgrade coming in. That, along with Tata Steel, Asha, SBI Life, JSW Steel, not doing well at all. What is holding on to the green from the sectoral front today is Nifty Pharma, IT, Media, FMCG, Realty. On the flip side, big cuts coming in for Metal, Auto, PSU Banks, Energy, and Nifty Bank. So that is what the market breadth is shaping up to be like right now, Ankita.
Absolutely. So that's how the market is shaping up, and we will get all the stocks that are in focus today. But first up, a big story coming in there. Just a few days back, after the end-of-life vehicle crackdown that we saw coming into effect in the national capital, the Delhi government has pressed the pause button. Now, facing widespread public backlash, the Delhi Environment Minister Manjinder Singh Sirsa has formally urged the Commission of Air Quality Management to suspend the policy. Now, the July 1st directive, which denied fuel to 10-year-old diesel and 15-year-old petrol vehicles. Let's go across to my colleague Nivedana, who's standing by with the latest updates of that story. Nivedana, over to you.
After the end-of-life vehicle came into effect into the national capital, it seems like the Delhi government has put a pause on it. Delhi Environment Minister Manjinder Singh Sirsa has written to the Commission of Air Quality Management saying that the policy is unfeasible on many levels. In fact, he's also gone on to flag off how there are technical issues involving the ANPR systems, faulty loudspeakers, as well as lack of real-time systems. Now, the key directive in that particular matter is also given the aspect that Sirsa has said that vehicles will not be impounded arbitrarily. One has to remember that ever since this policy came into effect on July 1st, which is just a couple of days back, it has faced massive backlash from the public over the same. More importantly, Sirsa has also spoken about how there should have been uniform implementation of this, going on to question that if it was done in the national capital, then why not in other regions, including Gurugram, Faridabad as well. While having spoken about the particular situation in implementing the policy as well, Sirsa went on to question how the previous Aam Aadmi Party government had actually put this into effect without setting up robust mechanisms as well. As far as end-of-life vehicles are concerned, remember, it was with the fact that they were denied fuel to 10-year-old diesel vehicles and 15-year-old petrol vehicles. Now that Sirsa has written to the CAQM about it, remains to be seen what directive will come from CAQM and ultimately how this is going to pan out for not just the national capital, but in the larger ambit of it in terms of the policy as well.
Okay, so that's the latest coming in from the national capital on that front. Nivedana, thanks for that. Let's begin the show, and this is the show where we're going to be taking you through all the big stocks that are buzzing in today's trading session, either on the back of news flows or technicals. Today, joining us in the studio is Rabinder from our in-house research team, and on the technicals today we have Sahaj, who's joining us on the show, Sahaj Agarwal, Head of Derivatives at Kotak Securities. Sahaj, hi, good afternoon and thanks for joining us. And Rabinder, good afternoon to you as well. Sahaj, let's come to you first. ACC is the stock that you've picked out for us. Now, when I pull up ACC on the charts, last 6 months absolutely flat, YTD in fact slightly in the red. After this consolidation that we've seen on the charts, do you believe time now for a reversal, or will this consolidation still stay for a little bit longer?
Exactly. Hi, Ankita and Snehi, and good afternoon to all the viewers. As you rightly mentioned, that ACC has been consolidating since quite some time, and given the current market setup, wherein we've crossed a significant level of 25,500, and now we are consolidating a bit in the short term. I believe value opportunities will really be looked into, and that should be the focus area. As a matter of fact, yesterday we saw some action in the consumer durable space as well. So keeping the value theme alive, I believe ACC is an extremely strong value proposition with a very good risk reward ratio on technical parameters. So keeping that in mind, I believe the stock has reasonable upside for the short term as well as the medium term, and hence I believe one can actually look at the stock with a 1850.
All right, moving on from ACC on the charts to the next counter, Bajaj Finance. This one's a top nifty gainer.
Absolutely.
Good quarter one updates coming in. Take us through them.
Absolutely, good quarter one updates coming in for Bajaj Finance. If you take a look at what these numbers have been, when the company reported their quarter one FY26 update yesterday post market hours, largely good set coming in because they've reported growth across key operational metrics in the first quarter, including new loans and assets under management. The customer franchise has come in at 106.5 million compared to just 88.1 million, so that's quite the uptick coming in on a year-on-year basis. New loans booked during the quarter went up by 23% year-on-year, which came in at 13.59 million compared to 10.97 million in quarter one. If you take a look at their AUM growth, this has also gone up by 25% on a year-on-year basis, and that's the major reason why the stock is doing so well in today's trading session. It's up 1%. You have AUM that's coming at 4.41 lakh crore rupees compared to 3.54 lakh crore, which is up 25%. Bajaj Finance also saw healthy growth in its deposit franchise because the deposit book rose 15% year-on-year to approximately 72,100 crore, up from 62,774 crore on a year-on-year basis. So healthy growth across metrics. Bajaj Finance good set of quarter one updates is what the company has reported.
All right, good quarter one updates coming in for Bajaj Finance, and that stock is buzzing away. In fact, both Bajaj twins are in focus today on the back of that. But coming to the biggest loser in trade today, Ravinder, Trent. That stock is down and out completely today. Take us through the news flow, a somber commentary coming in from the management and a downgrade. Take us through that.
Well, yes, Trent is in focus, where management in the AGM says that the growth trajectory for Q1 FY26 seems to be underwhelming, and given the high expectation based on the past track of the record of the growth at its AGM, Trent says that Trent's disappointed on the near-term growth expectation. Its core fashion business, which is expected to deliver approx 20% growth in Q1 FY26, sharply down from its 5-year CAGR of 35%, and management reaffirmed their aspiration of 25% plus growth for the coming years, but the current run rate falls short of it. And Q1 company has also announced the Q1 business update, and Q1 business update was also below the expectation. Apart from this, Nuvama has also come out with the note, and they have downgraded the stock to hold from buy rating, and they have also cut the target price. So back of the weak management commentary and below the estimate Q1 FY26 number, and downgrade from brokerages leading to a stock to decline, and the stock is down over 11%.
A massive cut coming in on Trent today. Remember, this is a stock that opened with a gap down of 8% and has only been falling ever since. But one of the reasons, like Ravinder mentioned, the stock is losing in today's trade is the negative note that came in from Nuvama. And we managed to speak with the author of that note today, with Abneesh Roy, who's the Executive Director at Nuvama Institutional Equities. He discussed the reasons behind the downgrade and his long-term view on the company. Let's go across and listen.
Longer term, we do expect Trent to come back, and Trent will also scale up new growth drivers longer term. Zudio Beauty and Star business, we see that longer term those can become the next big growth drivers, but it will take some time. If you see, some of the other fashion retailers have also said that because of the festival shift, etc., Q1 numbers, there was some weakness in North India. So overall, I think in Trent fashion business, strong base and overall festival shift, etc., has led to some level of slower growth. There is an urban slowdown, which we have been highlighting. So it's a mix of all this. Long term, I think Trent remains a compounding story. They have a vision to scale up revenue 10x, and already from a FY23 perspective, they have doubled the revenue. So we do see 250 stores addition yearly. If they can come back to a 25-30% kind of growth in the core fashion business and overall, I think the stock can re-rate post that.
All right, moving on from the biggest loser trend that's languishing in trade today to another counter that is not doing well, and that's Angel One. In fact, the share had declined almost 7% after the company reported a sharp drop in its gross client acquisition for the month of June. Well, according to the company's exchange filing, the gross client acquisition fell 41.5% on a year-on-year basis to 5.5 lakh in the month of June. On a sequential basis, though, the number rose 9.3%. The brokerage's total client base stood at 3.25 crores as of June, up 31% from a year earlier and 1.6% from the previous month. But on the back of the decline coming in as far as the gross client acquisition is concerned, Angel One is declining in trade. Right now, it has come off those lows, but nonetheless trading with cuts of 6.2% in trade.
Okay, so that's the take on Angel One, and a week update coming in. The stock is under pressure. But Sahaj, coming to you, Cipla is the stock that you've picked out for us. Now, while the Nifty Pharma pack entirely is doing well, Cipla is doing pretty okay in today's trading session, but nonetheless, it's in the green by 0.2%. Give us a sense of what you're spotting on the charts for Cipla, because YTD, the stock is absolutely flat. Same story for the last 6 months, 1 month. We've not seen any momentum on the charts. Going ahead, can we expect to see any?
So I think there's some volume build-up happening in the cash segment out there, and given the fact that the stock has been consolidating and the positive bias towards the overall the pharma space, which ideally is considered defensive. So when you have a market which is consolidating and to a certain extent correcting in the short term within the larger positive structure, the defensive space kind of does well. So Cipla happens to be one of the stock, and the main reason is we're seeing a lot of fundamental value out there as well. Having said that, that is just one of the filters that we apply. Along with that, the short-term volume uptick plus the favorable risk-reward ratio kind of makes it compelling to look at this trade as a strong opportunity, with the support placed at around 1470, and on the higher side, we believe 1600 odd really seems achievable in the next few trading sessions. So overall, risk reward value, current market setup kind of indicates that the stock should be headed upwards.
All right, with that, it's time for a quick breather. Don't go anywhere. After the break, we're getting you more buzzers on the other side. Stay tuned.
Powered by
Going with all the stocks that are in focus, and next up, let's talk about Torrent Pharma. This is a stock that has been doing well today. On the news flow that the company has signed a share purchase agreement to acquire an additional 2.41% stake in JB Chemicals and Pharmaceuticals from employees for a total cash consideration of 620 crores at rupees 1600 per share. This is what the company has said in an exchange filing. The acquisition involves 38.75 lakh equity shares, which the employees are selling after exercising their stock options. The transaction will be completed after Torrent finalizes its acquisition of a controlling stake in JB Chemicals, subject to shareholder and regulatory approvals, the company had said in a exchange filing with the stock exchanges. And remember, last week too, the company was in focus on the back of this acquisition news, wherein they're acquiring a majority stake in JB Chemicals. So, well, on the back of that news flow, Torrent Pharma up another 1.3% in today's trade.
All right, that's Torrent Pharma. But moving on to the next counter from the Pharma pack, Sahaj, you've picked out Lupin for us. The entire Pharma basket is doing very well today. What do you see on the charts for Lupin? Lupin has started showing some recovery in the last few weeks, but in the last 6 months, it has been correcting over a period of time. So what do you see on the charts now?
So in fact, the previous week volumes on Lupin were highest for around 6-7 weeks, and now we're witnessing some positive action out there. I think the bottom that we see on a weekly basis is placed around the 1925 mark, which is extremely strong. Today also the stock is trading around 1.5% positive. We believe that given the fact that there's been a volume uptick in the stock, and the stock is gaining gradual momentum over the current week after the volume uptick seen, there is a significant potential in the stock to move towards the 2100 mark, which initially happens to be the higher band of the trading range in which the stock is trading, as you rightly mentioned, since a few weeks. So we believe 2100, 2150 could initially be achievable, and though from the medium term time frame we believe those levels should be crossed and the stock can achieve higher levels as well. But initially that's what we're expecting, basis the positive setup, the momentum uptick and the volumes that have developed in the stock.
Okay, so that is Sahaj's take on Lupin and the next levels to watch out for. But Ravinder, let's come back to Q1 updates. And L&T Finance, largely inline set of numbers is what this company has reported, and it's holding up pretty decently today.
Well, as L&T Finance is in focus on back of Q1 FY26 update, where company said that the total retail disbursement was up 18% year-on-year basis to rupees 17,510 crore as compared to 14,839 crore. And companies say that the retail finance was up by 17.5% on a sequential basis, and acquired portfolio was acquired portfolio was down by 87% on a sequential basis. And during the Q4 FY25 result, company has given a guidance that the company says that they expect more than 20% growth in the loan book in FY26, especially in rural and urban areas. And the company is scaling up its micro lab businesses, which is high secured product, and is planning to enter into a secured SME loan. So back of a good Q1 FY26 business update, stock is in focus, and the stock is trading up more than 1% and also trading at an all-time high level.
Alright, moving on from that counter to the defense pack that is doing very well. It has been doing well. BEL, HAL, BEML all buzzing on the back of the fact that the government has approved acquisition of 1.05 lakh crore rupees worth of new defense equipment. Now the gains in defense stocks lifted the entire Nifty index by almost 1.5%. The Ministry of Defence's Defense Acquisition Council, or DAC, said that they've cleared capital acquisition proposals worth nearly 1 lakh crore rupees, and the 10 capital acquisition proposals are set to be carried out through indigenous sourcing from Indian companies. Now the acceptance of necessity, or the AON, is for defense equipment like the procurement of armored recovery vehicles, an electric warfare system, an integrated common inventory management system for the tri-services, and surface-to-air missile for the Indian Army, Navy and Air Force. And on the back of this big push coming in for the defense pack, all the defense counters, look at it, they are all trading upwards of more than 1.5% in trade today.
Okay, so that's the take on defense counter. Sahaj, coming to you once again, let's focus back on financials. And M&M Finance is the stock that you've picked out for us. This one too, absolutely lackluster in the last 6 months. I believe you've taken all the stocks that you are now expecting to see some momentum in. So give us a sense on M&M Finance.
So, you've highlighted a very critical point, that the value proposition seems to be the theme that I've kind of selected, and actually that's the fact. I think the market has already rewarded quite a lot of stocks which have, showing positive numbers now. Maybe quite a lot is discounted, and hence as a trader, as an advisor, I think it's extremely important to ensure that the value proposition still remains on the table. There are certain momentum set of trades, but given the fact that in the short term the market is correcting, I've focused a little more on volume and the technical setup. Keeping that theme alive, M&M Finance has given a weekly breakout of a falling trend line, and currently it's witnessing a pullback. Usually in a positive setup, post a breakout, when you have a pullback, that is an excellent opportunity for you to get into, right? And especially when you have a positive bias on the stock, even on the fundamental parameters. Along with that, if you have a good risk reward ratio, then I think again it's a compelling trade. 254 is a very strong support level, and around 290 to 300 on the higher side seems to be achievable by M&M Finance in the short term. So that's the trading advice for M&M Finance.
Alright, so that's the trading advice for M&M Financials. But moving on to the next counter, that's Tata Power, that's in focus. Tata Power Renewables has achieved record 45,500 rooftop installations with 220 megawatts installed capacity in Q1 of FY26. Now remember, there are a lot of Q1 updates that are trickling in right before the Q1 results come out. On the back of that, a lot of companies in focus. In Q1 FY26, additions have propelled the rooftop solar installations to 2 lakh mark, surpassing 3.4 gigawatts installed capacity. 416% surge seen in installations from Q1 of FY25. On the back of the quarterly updates, Tata Power is in focus today. It has given up those morning gains, has currently declined, but nonetheless holding out in the green, has turned absolutely flat as of now.
Okay, flattish move coming in on Tata Power. But on that note, we'll slip into a very short break on this edition of Market Fatafat and keep talking about all the stocks in focus on the other side.
Be alert, be scam safe. In a